All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin. And man, Bitcoin got a harsh rejection today, pretty much giving back all its gains that we saw yesterday off the pump of news. But you guys, we do have to be careful on these news pumps. And I did mention this yesterday that it was a pump based off of a tweet, a news that Donald Trump put out of Bitcoin reserves, as well as some cryptos added there. But I did say we have to be careful because this news actually hasn't happened. It's not confirmation of the news, it's just a tweet about the intention to do it. And today the markets are reacting. Not only did Bitcoin dump in crypto, but the traditional markets are dumping a bit as well. And we're just pretty much, we dumped down and pretty much gave back all our gains that we saw yesterday. Now, we did dump down to the level of support that I marked out yesterday, the only level I said I was really interested in looking for a long if we come down to. And that level is our 0.5 Fibonacci. If we do our Fibonacci pull from the lows to the highs here, and we look at our 0.5, it is in there. See, you can even see we wicked a little bit past it because our 0.5 was in confluence with our value area high of our prior range before this breakout. And really the strongest level was the pitchfork midline. And you can see we came down to the pitchfork midline, saw a little bit of a wick past that pitchfork midline here. But this is really where I wanted to see this general area of support, is where I was looking for a potential higher low to come in. But let me say this, guys. This rejection does not look good here. The depth of this rejection and the speed at which it happened, the volume increase on which it happened on pretty high volume. Like if we go in onto the 1 hour chart here, you can see the volume is pretty high here on this rejection. And so it's just not a good sign. We also do have to remember we did reject from that 786, and the 786 pull was that Fibonacci pull. Let's go on to the 3 hour chart from our 99.5 highs. Pull this down a bit. If we do that Fibonacci pull from the 99K highs before we started the impulse down, and this was a wave 1, a wave 2, our wave 3, 4, 5. We had our 5-wave impulse to the downside. And so if we do that Fibonacci pull from that 99K, 99.5 highs down to our lows that we made, and we turn on our 786, let's just go up here, 786, and you can see that's exactly where we rejected from, on the 786. And oftentimes after a big impulse in a correction, you will correct all the way up to that 786. Yesterday, I started talking about this push up as a possible 5-wave impulse to the upside, but I did mention in yesterday's video, I don't really like how this wave 2 looks. There wasn't really much of a correction in this area for a wave 2. And we were looking at this as a possible 1, 2. This would be a third wave. We would pull back. And the level that I mentioned yesterday that was really key to hold was our value area low, coming in right around 93K. And if we were to back test that value area low at 93K, hold that value area low and have reacceptance and find support there and have reacceptance back into our bigger range, that would have been a bullish sign. But the fact that we didn't even spend a full day back inside our value area and we had a harsh rejection today is in some ways a concerning sign for the bulls. Really, the bears are still in control here, and we are not able to get back in this range that is the key range that we lost here. This range coming here, and we also have a naked daily point of control up there now. That's new. But we could not sustain back above this 93K value area low here. You can see in some ways this is a loss of the range, a bearish backtest of the range, a rejection, and a drop to the downside. So even though right now we are finding support at our pitchfork midline, I'm not so sure it's just going to bounce us for a higher low before coming even lower. Another key thing that I want to talk about, if we zoom in onto the hourly chart here, you can see that we had these lows here right before our mega pump on the news here, on the tweet. And this was a very strong push to the upside, but you can see we did kind of double bottom here. We didn't even take the liquidity from these lows. It came very, very close, but we did not take the liquidity from those lows. And anytime you front run an SFP like that, usually you'll make a higher low and come back and bust through it. Also, we had our CME gap. We started to come into our CME gap from the CME gap that was created over this weekend, but we have not filled that CME gap. Now, that CME gap is in confluence with a few things. So we might come a little bit lower, fill that CME gap, and then push back up. But if we do the small range before this breakout here that we were forming kind of over the weekend, and we also do a golden pocket pull from the lows of the move to the highs of the move, and let me get that right. There we go. We turn on our golden pocket here. You can see the golden pocket is right above that swing failure pattern. So anytime we see a swing fail pattern, a liquidity grab into a golden pocket, I'm looking for that setup every time. Not to mention we have a point of control there, and our golden pocket was within filling our CME gap. So this level here is a pretty good support still. We have not come down to this level, but the fact that we front ran so closely this SFP means there's a higher probability next time that we come down into this golden pocket that it won't hold. The other thing I'm concerned about is this does look a bit impulsive to the downside here. This could be the start after seeing, now that we see that this is more of a three-wave correction here, a three-wave push to the upside. Well, what do we look for? There's two types of price action. There's impulsive price action and there's corrective price action. Impulsive price action happens in a five-wave pattern, or a series of five-wave patterns like a double 1-2, which has two 1-2s, the big 3, 4, 5, 4, 5. But corrective moves are generally three-wave moves to the upside. And we can see that this does look sort of like a three-wave move, like an ABC correction to the upside. We dumped, we saw our A wave here, our B wave, and then our C wave to the upside here. And now we're starting to dump harshly again. So was this just a three-wave correction to the upside before now coming back down and making new lows below our 79K lows that we made a few days ago? That is a possibility we're looking for. Also, if we look at this price action in here, we do see the possibility of a five-wave impulse in here. If we come into our Elliot waves and we look at this as kind of our wave 1 impulse to the downside, we had our wave 2 back up here. This all could just be the third wave. We could be bouncing on a fourth wave and then maybe see our fifth wave. Now, hopefully our fifth wave would end in our golden pocket area. I'm not so sure about that. And then if that doesn't, or it could continue lower here. If we break this golden pocket, that's when I'm going to start getting really worried that Bitcoin is coming to make new lows. So far, it is still, because if we zoom out, like let's zoom out onto the 4-hour chart and let's look at, anytime you make a major low, you usually see a pretty big impulse from that. And if on the 4-hour chart, let me get rid of some of this stuff and clean this up. On the 4-hour chart, you generally see extended wave 1 from a major low. That happened on the 89K area when we were looking at the 89K lows here. We saw that big extended wave 1, and then we kept pushing up here. So is this going to be this just a wave 1 of a much giant bigger impulse to the upside? Well, that's still a possibility, and I am going to go a little bit real world here. We know that this Friday, March 7th, Trump has the crypto summit coming up where they're going to bring a lot of the heads in crypto, a lot of the big wigs in crypto to the White House and discuss crypto regulations and discuss, the Bitcoin reserve and all these different things. So we need to hold this golden pocket though, or the 786 is like our last line of hope. But this golden pocket is really what I'm looking at here. And so this could be a wave 1. Maybe we're going to correct over the next week in a wave 2 down to this golden pocket area, maybe start to form a range around this midline, which often happens around bigger pitchfork midlines. We start to form ranges. Maybe our wave 3 can bring us up to new all-time highs. And then our wave 4, our wave 5, maybe this is the start of a bigger wave 5 that could bring us up to the top of the pitchfork around $117,000. But in some ways, to me, this is hopium right now because the signs that we're seeing, bears are still in control. Now, I just want to point this out as a possibility, but right now, I don't know if this is the highest likelihood. And why do I say that? Because if we go onto our daily chart, yes, we did see the green dot and we did get a big pump from that, but we're giving that back up. But you can see we were in this range for months. We lost the range with volume to the downside and we came to a major support level. We expected a bounce from the support level. We bounced, and we did get a strong aggressive bounce based off of a tweet and based off of news, but you can see pretty much coming back up to the value area low. We back tested it and couldn't even, we closed the candle, but the very next day we dumped, and the dump is a pretty aggressive dump, giving back the whole candle from the day before. Almost a bearish engulfing candle. I wouldn't say it's quite engulfing because we didn't completely do that, but it's not looking good here. You do not want to see this on the next day after trying to get back within the value area that you lost. So the fact that we are having such a harsh rejection here is a sign that this could have been a correction to the upside before lower. And if that's the case, I mean, what if this is, I talked about this before, our bigger impulse to the upside. 1, 2, 3, 4, 5. Actually, let's go on to this chart here, and let's go onto the weekly chart because I really want to talk about this. We've had a very, very clear impulse on the weekly, our 5-wave impulse to the upside. And with that distribution video that I made last week, I was speculating this impulse might be done and we might be about to see a bigger ABC correction to the upside, to the downside. So after your 5-wave impulse completes, you usually see an ABC correction to the downside. A, B, C, oh, I grabbed the wrong thing. Hold on. Here, and then you usually see a bigger ABC correction that would take months, a months of a correction of Bitcoin. And are we still just forming our first wave down? Now, we did have a strong bounce from support, but it was only really the anchored VWAP from the 49K lows in confluence with our golden pocket from the last daily low before this big aggressive impulse here in this area. And so if we zoom in onto the daily, we could look at this bigger first impulse down, which is a 5-wave, like in an ABC correction. You usually see a 5-wave impulse in A 3-wave correction in B, and then another 5-wave impulse in C. So let's go ahead and zoom in. Let's go on to the 4-hourly chart here. Is this whole thing just about to be the start of a much bigger impulse to the downside? Now, that's getting a bit aggressive. I understand that because it's 20,000 plus. Oops, I didn't mean to go that high. 12-hour. Could this be maybe our A wave? If this is the case, our A wave here, this was a B wave. And now are we going to see a C wave down to 70K? Now that would be actually a pretty quick ABC correction after a 5-week impulse. Only going to 70K would, in my opinion, be somewhat bullish to see our ABC correction only go down to 70K because it could go much lower. And this could be the start of a much larger A wave that just goes much farther. So this is something that I am concerned about here. We do know that we have higher time frame divs on both the bear divs on both the weekly chart here and on the monthly chart. We did close our monthly candle really red. Another big thing is our money flow. You can see how bad our money flow is going out on the weekly. And if we go like to the 2-day chart here, money flow is still coming out and it's crossing to the downside. It's starting to cross to the downside here, not quite yet. And does it continue to bleed out here and actually see that cross to the downside? So this is a little bit concerning for me, the way that we've dumped today and given back all of the profits that were gained yesterday, or all of the bullish sentiment, bullish momentum is what the word I was looking for, the bullish momentum that we gained yesterday. And if this weekly candle, because yes, it is only Monday, but if this weekly candle, let's go back out to the weekly chart here. And if this weekly candle continues to just continue this trend on the weekly, you can see 4 or 5 weeks now, 6 weeks or so, we've kind of just been bleeding out at the top of our cycle channel, a major, major cycle channel here. So do we just continue to bleed down to 70K area? This is a possibility we need to be watching here. We still have not seen our weekly bear divs play completely out here. We still have plenty of room left to keep dropping if they're going to truly play out. So really yesterday, getting back within the value area was the chance for the bulls to kind of take charge again, get back within this value area, and reestablish the bullish trend, the bullish sentiment, and continue to new all-time highs. But this rejection here today, very, very bad, very concerning here. Now, I do expect us to bounce. We are at a key pitchfork midline here, and I do expect this pitchfork midline to hold us for a little bounce here. But now what can we look for? If we bounce, we just need to look for a lower high before continuing down. This could be the start of a bigger push down. So we're going to keep both options in our mind. I don't want to be super bearish yet because we still haven't even hit our golden pocket and filled our CME gap. But it does make me a little bit more bearish, the fact that we front ran this low here from yesterday, and we front ran the golden pocket too. The golden pocket was front run just by a bit. And anytime you see a small bounce right before the golden pocket, you can see we almost wicked to it, and now we're bouncing. Yes, there was a reason because our pitchfork midline is here. That is generally a higher time frame trend, and it does support higher time frame trends pretty good here. But I just don't like what I'm seeing here. I'm not ready to give up yet on the bullish sentiment. If we do come back up to 93K again and reject, that's going to be a really big sign that, yeah, more downside, new lows might be coming in below the 79K lows. So let's go ahead and zoom in here onto the 2-hour chart. We can look at our Fibonacci targets. We'll go from the highs of the move down to today's lows. All right, we've got that golden pocket coming in here around 91.5, which is also a key area. That's pretty much where the prior lows were, between 89 and 91 in this area. And so that now, you can see those prior lows are in confluence with that golden pocket there. Let's look at the 786 as well. Yeah, 786 is the area. If we're going to reject, we have a naked daily point of control up there. We have our value area low of our range up there. And let's actually just look here to see if that naked daily, yeah, the naked daily is still fresh up there. Here's another thing, guys. We did not hit, at least on Bybit, we did not hit the naked daily point of control that was just below us. You can see we front ran it. That's why it's still extended out this way. So we front ran the SFP, we front ran the golden pocket, we front ran the naked daily point of control. Not a good sign. We are seeing the bounce right now, but it's not a good sign that we're front running that. Let's go on to Coinbase real quick and see if that's on. Yeah, we front ran it on Coinbase as well. Now, I've talked about these pitchforks. This pitchfork that I'm going to show you here on Coinbase is the same exact pitchfork that is on Bybit, but because they're different exchanges and they have a little bit different highs on that weekly time frame, because this pitchfork is pulled off of a weekly time frame, high time frame. So because they do, the pitchforks, when you zoom in, the levels are a little bit different, and you can see on the Coinbase pitchfork, we actually lost the pitchfork midline. We even back tested. Let's go into our 15-minute chart. We back tested it and we saw a little bit of a rejection here. And are we going to continue to reject? So now that we're losing this, are we going to reject here? Remember, the Bybit pitchfork, which I actually do like a little bit better, is about coming in here, or that's too steep, but like it's like this here. So are we going to see, it's kind of a battle between, and it's the same exact pitchfork. It's pulled from the same exact pivot points. It's just those pivot points, depending on a couple $100 higher wick on, Bybit than Coinbase, they do pull a little bit differently. So it's complicating things a little bit, but you guys do know my main exchange I follow is Coinbase, and this is just not a good sign for me. Not a good look here. Also, we did see earlier today, I did see some bearish CVD absorption between the highs here, and I was really concerned about that. I actually expected us to dump lower out of this. This almost was a sort of, if we zoom in here onto like the 6-minute, it was almost sort of like a bull pennant we were forming in here. We had the dump. We were forming this kind of ascending triangle price action here, something like this, and then we were forming this in this area, like the bear flag, and we dumped out of the bear flag, and we did reach the bottom target of the bear flag. So, and the reason why I thought this might play out is because we were seeing bearish CVD absorption. If we come onto our charts here and we look here at, let's go ahead and go on to the 15-minute real quick so we can see this a bit better. All right. And look at our open interest. We've just, everyone's getting wrecked in these markets right now. all the late longers that long this entire move up yesterday have gotten stopped out plus more. It's just a lot of carnage in the markets right now. But let's look at this here. So first off, between this high here and our lower high that we were trying to make earlier today, lower highs in the price action, higher highs in the CVD here. Now, our open interest it was kind of flat in this area through here, but it was a bearish, I wouldn't say absorption, bearish CVD divs though. And then we were also seeing some bearish CVD divs in this area. Now, it doesn't look like it right now, but we were seeing some bearish CVD divs between this high and this lower high, and then this area here. Let's zoom into the 5-minute and see if we can see that better, because it was showing there. Yeah, I guess it's not showing on this one, but I was seeing it on the Coinalyze charts earlier today. Bearish CVD here, and then now, of course, between those highs too, our open interest was increasing between those highs. So that was absorption. And then we saw absorption in the bear flag. The bear flag played out. Yeah, guys, this just doesn't look good here. It looks like we're going to keep making new lows. So key support down right below us is that golden pocket, the CME gap fill, our naked daily point of control, all within that area of support of this golden pocket here. And if this golden pocket doesn't hold, I would really, really be concerned that we are going to make new lows. So from 84.6-ish, 84.7 down to like 84.1. This really, really needs to hold. And if this is the start of a bigger 5-wave impulse to the downside, we can look at a couple things here. We can do our trend-based Fibonacci extinction from the highs to our wave 2 lows up to our wave 3 highs. Let's see which one was higher here. So we've already hit past our 1.618. Let's go to the 2.618. Yeah, the 2.618 is below the value area, or below our golden pocket. So that's a bit concerning. Let's see how it is, guys. I don't know what's going to happen. I'm just mapping out different scenarios, and we got to just have proper risk management and play whichever scenario comes out. I was a bit bullish on this $17,000 pump, as anyone would get bullish after seeing a $17,000 recovery to the upside, reclaiming our value area low. But the fact that we could not even spend one day above our value area low here, our key value area low, it was almost like a bearish backtest rejection. That's what this is starting to shape up and look like to me. And if that's the case, after losing a major range low in a healthy market, you'll come back up and backtest it, create that lower high, continue all the way down to make new lows. It's looking like that is a greater possibility today, far greater possibility today than it was yesterday. All we can do is watch. We do have a lot of support in this golden pocket. In fact, we have our point of control of this little weakened range here in that golden pocket as well. You can see the point of controls there. We have a naked daily point of control in there, our CME gap fill, and our golden pocket. So a lot of support down below us. I don't like how we front ran it. That's what I'm worried about. All right, guys, I'm just going to go ahead and cover Bitcoin in this video, and then I'll make another video later covering some of the alts. Let me know if you guys want me to cover some alts in the comments, and thank you for all your support. If you got anything out of this video, please like and subscribe. Have a good one.